Welcome. In this video, Xcn 63X bull attack may come, so why? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
The falling channel formation is one of the most focused on structures in technical analysis because it shows that the price has been moving downward within a band for a certain period. But at the same time, this structure carries the potential to change the trend direction with a breakout. Especially when an asset's price has been moving within a falling channel for a long time, investors examine how the price reacts to the lower and upper bands of the channel to understand whether it signals continuation or reversal. A falling channel is formed by two parallel and downward sloping trend lines. The lower line acts as support while the upper line acts as resistance. The price fluctuates between these two lines, moving downward. But the critical point is this: if the price tests and successfully breaks upward through the upper band of this channel, this usually signals the end of the downtrend and the beginning of a new uptrend. Because at some point the selling pressure in a declining market fades, buyers step in, and the price starts to gain upward momentum. A breakout from a falling channel is often supported by an increase in volume. This shows that investors now consider the asset to be undervalued and buying intensifies. Breaking above the upper band means the asset has left behind the negative leaning structure it was stuck in for a long time. When such a scenario occurs, it is quite likely that the price will begin to rise, because these breakouts also directly affect market psychology. Investors who have been watching the price fall for a long time start buying when they notice the breakout, believing the downtrend is over. As these purchases increase, the price rise accelerates. That's why breakouts of falling channels are very important in technical analysis and provide strong bullish signals. To explain with an example, the upper band of the falling channel is usually a resistance line that the price has tested many times but could not break. Once this resistance is broken, the area that was previously dominated by sellers comes under buyers' control. This means a new market balance has been established. If the price rises strongly above the channel, often a pullback occurs afterward. The price tests the broken upper band again, and if it finds support there, this confirms the uptrend. In such a structure, buyers' confidence grows, selling pressure decreases, and the rise rests on much stronger foundations. It's also important to examine more deeply the psychological effect of falling channel breakouts. When a market has been in a long-term decline, most investors become pessimistic. This pessimism is known as bear market psychology. But when the price breaks above the falling channel's upper band and begins moving upward, this pessimism turns into optimism. By human nature, investors start buying to avoid missing the opportunity. This accelerates the upward movement of the price. In fact, a falling channel breakout signals not only technically but also psychologically the turning point of the market, because seller strength is broken and buyer's appetite increases. Another important point is that when a falling channel is broken, the rise in price is often equal to the height of the channel. In technical analysis, this is accepted almost like a rule. In other words, the distance between the upper and lower bands of the falling channel is measured and added to the breakout point to predict a target price. In most cases, this target is reached because the breakout unlocks upward potential. In addition, Fibonacci levels can also be used to set targets in such situations. Breaking above the upper band of a falling channel also marks the beginning of a trend reversal, so it's supported by technical indicators. For example, the RSI indicator usually shows an upward structure during this process and exits the oversold region. The MACD indicator gives a bullish crossover showing momentum is starting to increase. The volume indicator confirms the breakout is real. If all these indicators support the channel breakout, the likelihood of the rise continuing is very high. That's why when the upper band of a falling channel is broken, attention should be paid not only to price action, but also to technical indicators. One of the biggest mistakes investors make in such cases is not taking the breakout seriously enough. Many people think the price movement is only temporary and do not trust the rise, but breakouts are one of the strongest reversal signals in markets. That's why breaking above the upper band of a falling channel represents a major opportunity for investors. At such a point, when the price begins to rise, it is foreseen that the trend can continue in the longer term. Because in technical analysis, it is known that once a trend changes, this change does not usually last for only a short time. When an uptrend begins, it generally creates a long-term upward movement. Relating this to the cryptocurrency markets, crypto assets often experience sharp declines and sharp rises. When a coin trapped in a falling channel breaks the upper band, it draws great attention from investors, because investor psychology in the crypto market shifts much faster. That's why falling channel breakouts in cryptocurrencies often lead to very strong rises. Especially when a crypto asset has been in a downtrend for a long time, breaking above the channel's upper band can lead to significant gains within just a few days. This allows investors to earn both short-term and long-term profits. In conclusion, breaking above the upper band of a falling channel is one of the strongest signals that the price is about to start rising. This structure is an important turning point both technically and psychologically. Once the price moves above this band, the downtrend is over and the way for an uptrend opens. That's why investors should carefully monitor such breakouts, evaluate buying opportunities, and analyze technical indicators to understand how strong the rise can be. Falling channel breakouts provide major opportunities for investors to grow their portfolios because they are one of the strongest signals of an exit from a decline and the beginning of an uptrend. But we can't make a decision based only on the channel, so let's also look at the other metrics. Keep watching.
The falling trend structure formed in the RSI indicator is a very important signal for investors to closely observe the overall perception of the market and the momentum of price movements. The falling trend structure shows that RSI values are creating lower highs and lower lows over time, and this usually indicates that the market is in weak momentum. However, the point to note here is that RSI does not continue to fall forever. On the contrary, most of the time such falling trends break at a certain point, paving the way for the price to gain upward momentum. In other words, the breaking of the falling trend seen in the RSI can be interpreted as a very positive signal, showing that the price has started to gain strength and the possibility of an upward movement has increased. The breakout from a falling trend in the RSI indicator usually occurs in sync with price movements. For example, when the price is under pressure for a certain period of time, the RSI also shows a falling structure in parallel. However, if a certain support level is maintained, it shows that buyers are still strong in the market, and at this stage, when the RSI starts to break its falling trend, the price can also respond by moving upward. At this point, the upward momentum of the RSI is actually a strong leading signal that the price will also move in the same direction, because the RSI not only measures where the price is going, but also the strength of the momentum behind the price. The stronger the momentum, the greater the potential for price increases. Such movements in the RSI also give investors psychological confidence, because in the markets, technical analysis is not only about lines or numbers, but also a reflection of investor psychology. The upward breakout of an RSI in a falling trend shows that sellers in the market are starting to lose strength and buyers are increasingly stepping in. This situation is considered a buying opportunity by many investors. Especially if an RSI breakout occurs after a long downtrend, this is often a sign that the price will move strongly upward. In addition, the signals given by the RSI at certain levels are also very important. For example, if the RSI hovers near or below the 30 level for a long time and then breaks its falling trend to gain upward momentum, this shows that the price has escaped from the oversold zone and can now start a stronger upward movement. Similarly, when the RSI starts to move above the 50 level, this indicates that the overall perception of the market is changing positively, and the likelihood of the price continuing its upward movement has strengthened. In other words, a trend breakout in the RSI gives us important clues about the future direction of the price. In addition, the breakout of a falling trend in the RSI indicator is often supported by different technical structures in the price chart as well. For example, while the price is in a falling channel, the RSI may also show a falling trend. However, when the price breaks the upper band of the channel and the RSI ends its falling trend, the combination of these two technical structures creates a much stronger bullish signal. In other words, the upward movement of the RSI provides more reliable results when interpreted not only on its own, but also together with other technical analysis tools. Especially when both price movements and RSI show a breakout in the same direction, it is considered a sign that a major change has occurred in the market and a new trend is beginning. In light of all these analyses, the breakout of a falling trend in the RSI may indicate not only a short-term recovery, but also the beginning of a strong upward trend in the long term. Especially if the market has been in a long-term downtrend and RSI values have been stuck at bottom levels, the breakout of this compression is a very positive development for the price. Because in such a situation, most investors start to think that the price will not fall further, but rather a new upward period will begin. This psychological perception also accelerates buyers entering the market and pushes the price further up. Since the breakout of a falling trend in the RSI indicator usually results in the price rising, investors can shape their strategies accordingly at this point. For example, an investor may prefer to take a position the moment the RSI breaks its falling trend, because this is usually a strong indication that the price will rise in the short term. At the same time, stop-loss levels can be determined more clearly after this breakout, because when the breakout occurs, the market has already formed a certain bottom. This provides both confidence and strategic advantage to the investor. Another important point is that such breakouts in the RSI are often supported by volume movements in the price. If trading volume also starts to increase as the RSI rises, this means much stronger confirmation of the price's upward movement. Because not only the movement of the price or RSI, but also the fact that volume accompanies it increases confidence in the market. In this case, the probability of the price rising becomes much stronger and creates opportunities for investors. In conclusion, the breakout of a falling trend in the RSI indicator allows investors to develop a very positive outlook regarding the future of the price. When the RSI rises, the probability of a price increase also rises, because this shows that both the momentum has changed and buyers are becoming more dominant in the market. Such a structure paints a very positive picture in terms of technical analysis and is a strong indicator that the market may enter a new upward period. Investors carefully following such breakouts helps them capture the right buying opportunities as well as correctly read the general trend of the market. Especially after the falling trend in the RSI is broken and the price starts to rise, this provides investors with both confidence and profit opportunities, paving the way for a more stable upward trend in the market.
The cup and handle formation is one of the strongest and most positive patterns in technical analysis that investors pay the most attention to, as it carries the potential for a major long-term rise. This formation especially appears when an asset begins to gain strength again after a long period of decline or sideways movement. Seeing that this formation is currently forming in the price, with the handle being created, paints a very strong and optimistic picture for the future. Because the cup and handle formation does not only indicate a short-term rise, it also shows us that in the medium and long term, the price could climb to much higher levels. The cup part represents the process of forming a long-term bottom in the price. In this process, the price first falls from a high level, then recovers and slowly makes its way back toward its previous peak. As a result of these movements, a cup shape forms on the chart. Then, when the price approaches the peak, a slight pullback occurs, which is usually a small correction. This small correction is called the handle. So the fact that the price is currently forming the handle actually tells us that we are right before the big breakout. Because once the handle is completed, the formation usually breaks upward and the potential target is the depth of the cup. Based on measuring the depth of the cup, we get a target of about a 63x rise. This figure is quite striking because for an investor, a potential 63x return represents a gain that could completely change their life. But what is important here is that this formation works not only theoretically, but also very strongly in practice. Throughout history, we have seen many successful charts where the breakout of the cup and handle formation resulted in massive price surges. Especially in the cryptocurrency market, where investor psychology leads to much faster and sharper moves, the probability of these formations reaching their targets increases even more. Because when investors notice such structures on the chart, they start buying collectively, which causes the price to accelerate rapidly. The cup and handle formation also makes a lot of psychological sense. In the first part of the cup, there is a price decline, and this period is usually filled with panic selling. But over time, this panic begins to fade, investors start to regain confidence in the market, and the price recovers and moves upward. On the right side of the cup, the price reaches its peak again and tests the previous high point. At this very moment, the handle part represents a small profit taking in the market. Some investors take profits and the price pulls back slightly. However, this handle process usually occurs with declining volume, meaning the selling pressure is not strong. This shows us that there is no longer significant selling interest in the market, but rather most people are waiting for a new upward wave. What we are observing in the price right now shows that this psychological process is playing out exactly. The price has completed its cup, approached the peak, and is now forming the handle. This means the price may move sideways a bit more or pull back slightly in the short term, but then a strong breakout is expected. When this breakout occurs, the target ahead for the price will be equal to the depth of the cup. The fact that the depth of the cup shows a potential 63x rise once again highlights how important this formation is. So here we are not just talking about a small rise, but a bull run of historic proportions. The cup and handle formation is important not only for its targets, but also for the sense of confidence it gives investors. Because the formation indicates that the price has completely broken its previous downtrend and has now entered a new uptrend. For investors, this means a big opportunity. Especially long-term investors hold or even increase their positions in such formations because the cup and handle formation is not easily broken. So the fact that the price is currently forming the handle is a sign of a major rise ahead, and investors who remain patient during this period could be rewarded many times over. The fact that the formation shows a 63x rise target is essentially a mathematical calculation, but when combined with market psychology, it presents an extremely realistic picture. Especially the deeper the cup, the higher the target is expected to be. This shows us that while the past decline in price was deep, the recovery afterward has also been very strong. In other words, there is serious buying interest in the market, and these buyers are ready to push the price upward. When the buying pressure comes into play after the handle is complete, the price could rise rapidly and head toward the 63x target of the cup. Another good thing about the cup and handle formation is that it usually aligns with long-term trends. In other words, this formation is not a random shape, but rather one with very strong fundamental and psychological dynamics behind it. That's why investors get excited when they see this formation, because the breakout of this formation often signals the beginning of a new bull market. The fact that we see this possibility right now actually points to a very positive picture. The price completing the cup and forming the handle is a sign that much higher levels could be seen in the future. In short, the cup and handle formation clearly explains the structure the price is currently in. The fact that the handle is forming shows that we are in the final preparation phase, experiencing the calm before the big breakout. Expecting a rise equal to the depth of the cup as the target, which points to about a 63x potential, is extremely promising. Once this process is complete, the price making new highs and offering extraordinary gains to investors is a very high probability. Especially since this formation works in the long run with investor psychology behind it, the likelihood of this expectation being realized increases. That's why the current picture carries a very positive sign, not only technically but also psychologically and historically.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.